Hey, good morning, folks. It's Paul, the 920 Trader with 920 Trading, and Trading Decoded. Today is Tuesday. It is pre-market, June 11th, 2024. These are the things that we're going to be looking at on SPY today. Now, I've got the 30-minute, or actually this is the 1 hour. So this is the 1 hour chart pulled up. I want to show something that's very, very interesting. Number one, I already have all my levels set. I've got my pre-market high, pre-market low. I'm looking at some 30-minute zones down low, a 30-minute zone up top. I've got some 15-minute stair steps. So these are the levels that I'm looking for. But this is really, really interesting. Again, this is on the 1 hour. Look at this thin volume down below this level. Look at this and look and see how it corresponds again with this pre-market low. So we've got this level right here, so 533.55, and we got this 30-minute zone right down here at 530.09. Now, today is pre-CPI and FOMC day. This has only happened twice in the last 5 years. It happened in 2019. Let me get my dates straight here on this specifically. So this happened December 11th, 2019. It also happened on June 10th, 2020. Other than that, these are in the last 5 years. Those are the only two times, the only two times that CPI and FOMC has happened on the same day. Now, if you're wondering what happened on those days, I've got the moves right here. So 2019, December 11th, we had a $2.80 move. That was it. The day before, we had a $1.50 move. We didn't have a whole lot of movement. Now, June 2020, we had a $3.20 move. So it was a decent move. I would have expected a little bit more given the fact that, again, that was COVID. That was, I mean, we were dealing with COVID. We were doing a whole lot. Again, June 2020, $3.20 move. Now, the day before was a $4 move. So you got, and then a big gap down, a massive, massive gap down on CPI and FOMC day. But that's what happened back then. We don't know what's going to happen today, obviously. The only thing that we have coming out today at so 101, we have a 10-year bond auction. So that's really, that's a yellow, or I'm sorry, that's an orange folder event. So from a catalyst standpoint, we really don't have a whole lot going on. But again, these are the levels that I'm really, really interested. So pay very, very close attention to these levels today. Again, 533.55. If we start getting through this level back to the downside, again, look at all of this thin volume down here. We love to see areas of thin volume. Thin volume areas will allow us to anticipate the moves before they happen. You know, you're in that trade and you're thinking, okay, we're in a thin volume area. It just takes a little bit to push it one way or another. You know, if you've got momentum, if you're at, so let's say you're in puts. Right in here, and we've got a little bit momentum to the downside. It doesn't take near as much to push it down through a thin volume area as it does in a heavy volume area. There are fewer positions being defended in areas of thin volume. That's why we like these areas so much. Now, if you look at it on the 30 minutes, a little bit different. Again, you can see that it's thin down here, but now on the 15 minute, it looks like this. Again, super, super thin down here. You can see all this thin volume. But again, on that 1 hour, it brings more time periods, a longer length of time into play when we're dealing with this. So this is what I'm kind of looking at today. Now, I'm not saying that to say, you know what, take puts and open. I am absolutely not saying that at all. Make sure that, number one, your edge presents itself before you put on the trade. Number two, when that does present itself, execute. That's literally the only thing that matters, folks. And remember, it's always best. It's always best to take your plays if you're going to use the 920. So you're waiting for that cross. But again, there are multiple ways to play. You can play it aggressively. You know, that's before the cross. You can play a fishtail play. That's, you know, between the 9 and the 20. You can play a double cross. That's where we cross the 9 and the 20 on the same candle, either to the upside or the downside. Or you can play it conservatively. So you wait for the cross and then that first green candle to the upside or the red candle to the downside. Those are the different ways to play that. But what we want to do, folks, is we want to take these plays for calls directly above a major level. And again, those major levels, those are going to be 30-minute demand zones down low. And as you can see, we've got these 30-minute demand zones. This is the 1 hour, but the 30-minute lines up very, very nicely. So you got 30-minute demand zones down low, 30-minute supply zones up top, again, up here. Let me turn on this 30-minute. That way you can see this right down here. So we got a demand zone here. We got a demand zone down here. And again, you can see just how thin it gets. And again, supply zones on the top. Now, we can also use 15-minute stair steps. What we don't want to do is, unless it's a continuation play, we don't want to initiate a trade in the middle of two major zones. Wait for that major zone to hit, folks. Trust me. You will take fewer trades, but you will be better off for it. There's no question about that. Now, another major zone that I'm always looking at is called the POC. This is a POC. This is called the point of control. This is the point at which most money has changed hands during the trading day. Now, we use this on the 1 minute to determine where the POC is during the trading day. But again, on these higher time frames, this will show, again, this is on the 30-minute, and it played out. It worked yesterday as really, really good support and really, really good resistance, depending on where we were on the chart. But again, demand zones down low, supply zones up top, and then play it either aggressively. You can play a double cross, you can play a fishtail, you can play it conservatively. So however you are going to play that play, just be consistent. Please just be consistent, and then track what you're doing. If it's an aggressive play, track and put in your notes that it was an aggressive play, or a fishtail play, or a conservative play. However you are playing that play, make sure that you're taking notes and logging everything. You want to know every time you pull the trigger. You want to know what the expected value is every time you pull that trigger. And the only way you're going to be able to figure that out is to track your trades, folks. Log your trades. You're going to see exactly. So over a series of trades, so a series of trades over a long period of time, the longer the better, that's going to give you the confidence that you need to do this for the long term. It's not that one trade, folks. It's not that one trade that makes you or breaks you as a trader. It is a series of trades over time. But again, major zones only. But again, I just wanted to show this higher time frame chart today to show you the thin volume and just the possibility. Again, there's no guarantee that it's going to go down. I mean, obviously we have thin volume up top. We've never been in this area. Actually, we have just punched all-time highs. So it's not going to take a whole lot to push it down. It's not going to take a whole lot to push it up either. But anyway, that's kind of what we're looking at for the analysis this morning. These are the things that I'm looking at. These are the things that I look at every day to kind of determine without a bias. I don't want to have any kind of bias whatsoever. So no bias, but that's kind of what I'm looking at today, folks. So if you like our videos, please go ahead and give us a like, subscribe. Leave us a comment and share with your friends if you're interested in daily trading, where we go over every single one of these trades, folks. So every single one of these trades. Come check us out, folks. It's called Trading Decoded. We're going to give you that first week for free. If it is for you, wonderful. If it's not, hey, no harm, no foul. But again, we're going to give you that first week for free. If you're interested in the 920 crossover strategy, that's what we use. Head on over to 920trading.com. All of the information is there, folks. You don't need to spend a whole bunch of your hard-earned money to see if it works out for you or not. So anyway, check it out. Anyway, folks, that's pre-market. That's my pre-market analysis. These are the things that I'm looking at today. And again, today is June 11th. It's Tuesday, pre-FOMC and CPI day. So I hope everybody has a great day today. But above all else, I hope you follow your trading plan to a T, folks. Just follow that plan. So everybody, again, have a great rest of the day. And we will see you in the markets.